Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world one filing at a time. Today we're diving into a report from VeriSign, and let me tell you, it involves debt, interest, and a whole lot of numbers, but trust me, it's more interesting than it sounds, especially when it comes to seeing how they keep those domain names running. So VeriSign recently made a deal with some big banks like JP Morgan and Bank of America. This deal, called an underwriting agreement, is about selling a bunch of bonds, specifically $500 million worth of what they call senior notes. These notes are basically promises to pay back money in the year 2032 with a 5.250% interest rate. Think of it like VeriSign taking out a massive loan, but instead of a bank, they're borrowing from investors. This sale of bonds, is all registered with the Securities and Exchange Commission. That means VeriSign has to be transparent and follow all the rules so everyone knows what's going on. The deal is expected to close in March, meaning VeriSign will get the money soon. But what are they going to do with all that cash? VeriSign expects to get around $493.3 million after paying the banks their fees and other expenses. Now, here's the interesting part. They're planning to use this money, along with some cash they already have, to pay off another set of bonds that are maturing in April. It's like using a new credit card to pay off an old one. They are essentially refinancing their debt, pushing it further into the future. It looks like they are taking out a loan to pay another loan. These new bonds are being issued under an agreement with U.S. Bank Trust Company, who will act as the trustee, making sure VeriSign keeps its promises to the investors. These bonds will be represented by a global security, basically an electronic record of who owns what. Now let's take a quick look at the exhibits. Exhibit 1.1 is the underwriting agreement with JP Morgan Securities, BofA Securities, and US Bancorp Investments. Basically, it's the contract that dictates the terms of the bond sale. Exhibit 4.1 contains a form of second supplemental indenture, which dictates the relationships between VeriSign and the trustee. Exhibit 5.1 shows the opinion of their lawyers relating to the offering, basically a legal thumbs up. Now, let's talk about what this all means for VeriSign. They're essentially managing their debt by taking advantage of current interest rates. By issuing new bonds, they're able to pay off older ones and potentially get better terms, or at least push the payments further down the road. From a financial perspective, let's zoom in on a few key numbers. They are getting about $493.3 million, and it costs them $6.7 million in underwriter discounts and expenses. This all gives them runway to operate in the coming years. What really matters is what they plan to do with that runway and where they want to take their business in the future. So, what's my take on VeriSign? First off, VeriSign has a rock-solid business. I mean, they basically run the and net parts of the internet. People need domain names, and VeriSign is the gatekeeper. They have a huge advantage and strong market position. But here's the thing, they're playing it pretty safe. Refinancing debt is a smart move, but it doesn't exactly scream innovation or growth. They are not some tech company poised to disrupt a market. They're more like a utility, reliable but maybe not super exciting. The main risk I see is that the internet landscape could change. What if people start using different types of addresses, something other than com or net? Or if governments get more involved in managing domain names, that could shake things up. For the immediate future, VeriSign is probably in a good spot. They're making money, managing their debt, and keeping the internet running smoothly, but they have to keep an eye on the future and be ready to adapt if things change. They can't just rely on being the comm company forever. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate deep dives. We will see you next time.